Okay, please can you see my screen? Please confirm you can't. Okay. So please, I would still try and get to know people's names, and as we proceed, we'll know each other better. So for this class, our topic for the day is internal audits and outsourcing. Internal audits and outsourcing. Okay, so I just want to ask somebody, what is an internal audit function to you? What is an internal audit function? So can have Mr. Elvis and maybe Zainab. What's internal audit? So I'm listening. Let me move away from it. So what is internal audit? Mr. Elvis and Zainab, please, you can answer for us.
Okay, good morning, everyone.
Good morning.
So to the internal audit function is an independent assurance in an organization to determine the risk, and then do an internal control process in the organization.
Thank you. Thank you. Okay, Mr. Elvis. Mr. Elvis just joined the call. He now left us, because we are making noise, but that's fine. So what Zainab said actually is spot on, is one of the core functions of the internal audit function in itself. So let's look at what ICANN itself has said about internal audit. So according to the Institute of Internal Auditors, internal audit is a dynamic profession involved in helping organizations achieve their objective. It is concerned with evaluating and improving the effectiveness of risk management, control, and governance in an organization. So what we can see is that internal audit simply amplifies the corporate governance requirements that an organization is supposed to have, where they are separating ownership from control, right? So it is a dynamic profession that basically entails helping organizations achieve effectiveness. Effectiveness in what? Okay, so we can just use our, okay, I wanted to highlight that. So effectiveness of risk management, control, and governance. So you can just hold on to these three key things as the role of internal audits. Now, the normal definition that we know, or when we want to use it in like organizations context, internal audit is basically an appraisal system, an independent appraisal system. But just like Zainab has said, the difference between this internal audit and the external audits, which are the big fours that we know, is that it is established by management. So internal audit is an independent appraisal system that is established by management for the review of the accounting and internal control system as the service to the entity. So just like I've highlighted, we're going to highlight some key things. These key things are things that no matter how you want to go into the exam hall and use your own opinion, use your own ideas, these things must always be in your definition. So internal audit is an independent appraisal system. Who establishes it? By management. For what? They are reviewing the accounting and internal control system. Right? Okay, now let's move on. As a service to what? Established by management as a service to that same management. I don't know, can I change this? Let me just erase it a bit. Okay, so established by management to that same management. Now, we have mentioned 2 times the people that are providing this service and the people that need this service. What's one thing you can bring out from this? It just largely shows you that the function of internal audit is not an independent function. like we'll say it is not dependent on management and all of that. The internal audit function is actually dependent on management because it is established by management for management. Now, moving on. The role of internal audit. The role of internal auditing has become more significant in larger entities and now is seen as an important management tool. So before now, organizations will not have internal audits because they're like, our auditors mawashi, right? But in recent times, people have understood that we have something that we call control risks. If you have done audit planning, right? Control risks is the risks of a deviation happening in your FS, assuming there's an internal control and that internal control is not able to detect and present that error at the time they should. But what is inherent risk? Inherent risk is the risk that there will be deviations in your FS, assuming no related internal control even exists in that organization. So this tells you that internal audit was not as accepted before as it is right now. Now, move on to say there's no legal requirement for an entity to establish an internal audit function. That is why so many organizations, it's not compulsory. It's not like how you go and everybody wants to have board members because there's a statutory requirement that says that, or how you go and every public limited liability company needs to audit because there's a statutory requirement for them to audit. Internal audit is something that an organization has to see the need for before they do it. Okay? Everybody together? Do I have a class? Hello?
Yes, I'm with you.
But I have 8 people on this call and only Zainab is responding. Deborah,
Yes,
how are you?
together.
Good morning. I've not heard Deborah's voice today.
Yeah,
Good
we're with
morning,
you.
ma'am. I'm here, I'm
Okay.
with you too.
And I'm talking, you put no answer me. No, I don't like it. Left to me, everybody should even unmute if you are in a space that is not noisy. Okay. So I just did a background knowledge of internal audits, and maybe for some of us, that's even the position that we're occupying, right, in our various place of work. So employing internal audit, so employing control, so employing risk management, all of that. So this is basically why it's essential. It's more like if effectiveness is already ascertained within the organization, it reduces the time that is spent on the audit. It increases the auditor's ability to be able to rely on the information that he gets from that organization. And even when he's communicating, there's some communications that he will have that we're able to have directly with the internal audit team. Okay, so please somebody should read the reasons and importance of internal audit for me. Okay, so just yes.
Internal
Okay,
audit helps management to monitor the control within the entity.
Okay, number 2.
Internal audit function can be used to monitor the efficiency of operations. Number 3, internal audit helps management to check on compliance with laws and regulations. Number 4, specialist internal auditors can help management to review the effectiveness of controls within IT systems.
Okay.
5, internal audit department may be used for work not related to the external audit that might otherwise be given to an external firm of accountant as non-audit work.
Okay.
Senior management can use an internal audit department Senior management can use an internal audit department to carry out external checks on its operational department.
And the last one.
Where there's a high risk of control failure, the location of business may be visited more frequently by the internal auditors.
Okay, thank you very much. So I wanted him to read everything together for you to see that the benefit of an internal audit really transcends to the efficiency of the firm, right? Everything that they do is not even for public eye, but it is for themselves, right? For the organization in itself. So thank you very much, Mr. Elvis. Okay, we said that internal audits help management to monitor the controls within their entity. If this is not the first time you are coming across audits, you will know the types of internal control that we have, which is PAPAM or SAS, Abi. That's the acronym. So internal audit is that function that basically makes sure that the controls that have been established in that organization are being implemented. Number two, they now monitor the efficiency of what? Of operations. So a law, if something is a law and people disobey it and there's no feedback, you're basically just communicating to people that every other person can do that same wrong thing. But the moment there is a cause and effect, right? Everybody knows that this is the law that has been laid down. If I don't follow this law, this is what will happen. What it does is that it allows, it leads to efficiency in the organization's operations. So external auditor cannot be checking day-to-day operation, but there's somebody with them in the organization that can help them to see what they are doing as they move on. The third one is to check on compliance, right? Is to check on compliance. These rules and regulations, like all these telecoms, like all these just very high risky industries, they don't joke with their internal audit function, because before they will have external problems, they believe that their internal auditor should be able to help them detect this problem and kind of advise the organization about what to do before, like
banks.
Yes, banks, even telecoms. There was like, because any small thing, I think you can see now, they are currently suing WhatsApp for about 200 million, Abi, and there's even one that is in the FCPC something. Who are they even suing? I think it's not Indomie Foods or something, So that's where their internal audit function comes in. That they call it legal and regulatory, if for some organizations, but they're basically doing everything in-house to make sure that they don't have external problems. Okay. Next up, we have specialist internal auditors can help to review the effectiveness of IT systems. So that there's in every organization, there's that IT guy that you are not really sure why he's collecting salary. But he regularly sends you mails, avoid spam mails, do this is how you can block the access to on verified websites, you understand, those kind of things. What that guy is basically doing is control. What he's doing is internal control, because the work that we do in finance is very, very fragile. Information is the game of the business, you understand? So it's very, very important that client information does not go out, and that is where specialized controls can come in. Now we have that internal audits may be used for work related to external audit. Like I said, when the external auditor comes in, he does not want to try and be explaining himself to one department that does not understand what he's saying. Like, he's trying to talk to the manufacturing guys, he's trying to talk to the sales team. Those ones, they are on his target and moving on. But interacting and having conversation with the internal auditor can tell him to a large extent what the organization's stand is on like internal audits, right? The next one, we have that senior management can use an internal audit department to carry out external checks on its operational department. So in case they want to do like a review of a particular department, they want to do like a review of like discontinuation of one section of the business, those kind of things. It depends on how good their internal audit team is, but they should be able to call the internal audit team to do a review and give an advice on what the stand of the firm should be. Okay, so now they've now said there are some internal audit activities. Please pay attention to all these subheads. These are not very important topics. They're not everyday topics. The parts that have been allocated, they're not everyday topics, but they're topics that when they come out, is most likely a full 20 marks question, a full 15 marks question. So if you know it, it will be to your own advantage. So you can see that importance of internal audits is definitely different from activities of internal audit. But if you pay attention, you see that from every importance, there's an activity. Number one, monitoring of internal control. Number two, examination of the financial and operating information. Number three, review of value for money audits. What is value for money audits? From your PSAF, you know that value for money audit is the 3E audits, right? Economy, efficiency, and effectiveness. Economy means to do things cheaply, not to do things cheaply, to do things at the least minimal cost. Efficiency means to do things well on an input-output basis. And efficiency means to do things the right way, looking at the procedures that are being done to achieve that particular thing. So that's the third role. That's the third internal audit activity. Then we have, like I said, review of compliance. The internal auditor reviews compliance of laws, regulation, external requirements with management. This is often called compliance audit. So you can streamline this to monitoring of internal control, examination of financial and operating information, review of value for money audits, then review for compliance. Okay. So now we'll now move on to the difference between our internal auditor and external auditor. If this kind of question comes out, I believe that when you see it, you should just be smiling and be happy, right? At this stage in your professional journey, I want to read that the reason why you are quiet is because you are learning a lot. Is that why? Because everybody just went, like I'm talking to an empty room. Hello?
We're fine.
Hello?
We can hear you.
Yeah, we're
So
hearing.
Okay. But so don't mind me, but I'll always be asking these questions at intervals because me too, I'm always in online meetings. And I know that it's important for your attention to be called every now and then. Okay, so I said at this stage of a professional journey, when they ask you to differentiate between two things, the best way to do it is to have a basis. You understand? So the basis is here, and you have the two differences. So what is the role of the external auditor? What is the role of the internal auditor? The role of the external auditor is to express an opinion as to the truth and fairness of a financial statement. Then what is the role of the internal auditor? Just like you have said, he's supposed to review systems and controls and assess the risks in order to make recommendations to management for improvement. So the internal auditor is clearly a staff of an organization, right? He's not independent of the organization. Power. Who sets the power of an external auditor? The power of an external auditor is being set by the statutes, while the power of an internal auditor is stipulated by management. It's the person that employs him that will say, okay, Deborah, this is what you'll be doing, right? Vincent, this is what you will be doing. And you cannot wake up and say, oh, this is what I'm supposed to be doing. Like, today, like this, I want to go and be checking what CFO has approved. You understand? It can only
Did you send this to our platform?
No, but you want it. I want to send at the end. I know I sent at the end of the class.
Okay, at the end of the class. Okay, it's fine.
Yeah.
It's fine. I just want to be sure.
Okay. Yeah, so we can just
Then please,
work
when you
together.
are done with the difference, sorry,
Yeah.
please, I'm interrupting. When you are done with the
Okay.
difference, we're trying to, if you go up, come
Okay.
here where we left the last page.
This page.
Yes. Okay. No, the other page. I think you just summarize the internal audit activities into 3 subheads: value for money
Okay.
audits, compliance audits. There's a third one you said. That is
Okay. So I said
all the points there. You summarize it under 3 heads, I think.
about 4. So
Okay,
I
4.
said
Okay.
monitoring of internal control, examination of financial and okay. So this
I
economy,
think I
efficiency
get it.
and effective. Yeah, then review of
That's the value for
compliance.
money audit. It's fine. It's
Yes.
fine now.
Okay.
Okay now.
Oh, I think this highlighting is better, isn't it? Because that one was stressing me out. But let's continue. So, like I said, so the powers of external auditor is set by the statutes, while that of the internal auditor is set by management. Who appoints the external auditor? Shareholders, right? Typically, there are 3 ways an external auditor is being appointed. The first external auditor of a company appointed by directors. If a company has gotten their certificate of incorporation for 6 months and they don't have an external auditor, the CAC, which is the registrar of companies, has the right to appoint an auditor for them. But in the normal business course, that is the normal activity of a business, their auditors are typically appointed by their auditors are typically appointed by shareholders. So now let's move on to the duties. The duties of an external auditor are also set by the statutes. So basically, in CAMA, they have a section that defines the rights of auditors, duty of auditors. So that in itself just stipulates what the power of an auditor is, what they are, how they are appointed, their duties, and who they report to. So that's why everything is external. Now, let's look at that for the internal auditor. For the internal auditor, we have seen that is appointed by management, his duties are set by management, and is reporting to who? Management. Okay. Now, moving on. The internal audit function the internal audit function often has a much wider role than simply performing financial audits. In many entities, particularly large organizations, the internal auditors are involved in every aspect of auditing, such as energy audits, social audits, environmental audits, and human resource audits. So they are trying to say that apart from those 4 functions that we gave that look like financial audits, these are 4 other types of audits that the internal auditor carries out. You understand? So if they ask you that apart from financial audits, what other audits does the auditor carry out? This is where this one comes in. So when you hear energy, when you hear energy audits, which kind of audit is it? Somebody should tell me that is human strength too. So typically energy audits just means light and heat, right? Light and heat audits. The second one is social audit. Social audit does not mean how they are social. It just means that what is the impact of that organization in the environment or the society in which it operates in. So CRS, things like that. CRS is corporate social responsibility. Let me stop assuming. Okay, then we have environmental audit. So environmental audit is basically checking the impact of the organization on the environment. So things like their waste, things like their maybe like their paper consumption, recycling, their contribution to air pollution, and all of that. Okay, then we have human resource audits. Now, human resource audits, these are audits into the workforce of an entity to check whether the entity has adequate system for recruiting. So human resource audit is basically checking that, okay, what are the recruitment goals? What are the human resource goals of this entity? And what is it doing to achieve what its human resource goals are? Okay. So do I have any question based off of this before moving forward? So like I said, this is not the type of internal audit. So these ones are just, they can tell you that. So maybe when you're looking at your types of internal audits, you can now say other types of internal audits is energy audit, social audit, environmental, and human resource. Do you get? So does anybody have any question to this point?
Yes, I do.
Okay. Can
You made mention of the appointment of the external auditors by the shareholder.
Yes.
What about the directors? Can the directors appoint the shareholders?
No,
can the directors appoint the external auditors?
Okay, so that's why I said that typically your auditors are actually appointed through 3 ways. You understand? The first auditors of a company are being appointed by the directors because at that time, the company has not done an AGM. An AGM is an annual general meeting, okay, where your shareholders will sit also. You get? Now, the second one is when I said certificate of incorporation. After 6 months, the company has started to operate and they don't still have an auditor. So the Corporate Affairs Commission will typically appoint an auditor because a public limited liability company that has made external individuals subscribe to shares is supposed to have an auditor. Then the third one is a business that's continued to operate after a long time will typically have an annual general meeting at the end of every year. So at the end of that financial year, the shareholders have to state who they want to audit them. Now, the reason why directors cannot appoint auditor is because corporate governance, basically, trying to separate ownership from management. These directors are the ones that are doing the day-to-day running of the organization, which is management. Are you with me?
Thank you.
But when we talk about ownership and control, these are one of the few ways that shareholders can be reminded of the power that they have in that organization by putting in place the people that will be checking the activities of those people that they've put in place to manage the business. Does that make sense?
Yep.
Okay. So now let's look at the types of internal audits. Financial audit is a traditional role of an internal auditor. Internal auditors may be asked by management to review accounting records, and other records to substantiate figures appearing in the financial statement and management account. So all this English to say that internal auditor cannot be there and not be doing financial audits. Abi, that's the first, and that is the core of his work. Now, moving on to say this work overlaps with the work of an external auditor. Operational audits examines the entity's internal control procedures, whether or not control systems that have been established by management are operating effectively. Now, the reason why I'm using this material and I believe that it works is because I've also just opposed it with the pack, and all the relevant information that you need to know is here. You understand? So if I'm saying you can work with it, you can actually work with it. Okay? Because somebody will say that she just came to the class, she's reading word for word. It's good. This material is good. Okay? Now, so just want to highlight financial audits, right? Then we now have operation. Financial audits, audit of financial records. Abi, operational audit is now the audit of the internal control procedures that have been put in place in that firm. Third one, compliance audits, right? It is the audit of rules and regulation. So these are the three major types of audits that an internal auditor is supposed to carry out. So exam question, 10 marks, types of internal audits. You are supposed to explain these three. You can now say, however, the service of an internal auditor is not limited to these three. It can also carry out energy audits, human resource audit, social audit, and what? Environmental audit. Nobody will beat you. And the answer booklet is long enough. You have 16 pages to explain yourself. You can even start writing about the story of your life. Nobody will beat you, and it will be enough. But just be time conscious, right? Okay. Now, the second part of this our topic is actually a short and direct topic. The second part is basically outsourcing. Are you with me? Now, in recent times, organizations, just like we said that there is no statutory requirement for any organization to carry out a internal audit. They carry it out because they want to carry it out. Are you with me? So outsourcing just basically means that there are some functions that some organizations want to do, but they don't have the capacity to do it themselves. Setting up a whole department to carry out that function may be stressful, and it may even be more cost intensive. So I want somebody to read the concept of outsourcing for us. Very direct. I will even use the simplest thing to explain it. So somebody that wants to unmute can speak for us.
Outsourcing by a company means arranging for an external entity to perform a task that would otherwise be performed by the company's own staff. It usually refers to routine and respective procedures and operations. Outsourcing of work to external suppliers and service organizations is a common practice. Examples of work that may be outsourced include payroll operations, internal auditing, 3, financial and managing accounting activities. For example, data processing or pensions. 4, IT services.
Thank you very much. So a typical example, you know how when we were growing up, when there's a family function, the house is chaotic, right? Mommy is bringing her adogon, calling all her friends, everybody's cooking, they want to do more lewe, they want to do more of nylon, they will now do a father, they will do jollof, they will do, do you understand? The party is 2, mommy gets there at 5:30 because she's supervising cooking. But in recent times, every couple that is getting married is saying that me running share affiliate, right? So that is basically outsourcing. It is just simply a company not using its own staff, outsourcing the work to external suppliers. Now, when it comes to the work of finance, basically, a majority of the work that is being outsourced is payroll, internal audits, financial and management accounting, right? Which, for example, is data processing, pensions, IT services, taxation, due diligence, and non-financial services. Like I said, that's the example that I just gave. So non-financial services like operations can also be what? Outsourced. Now, outsourcing is good, it reduces stress, all of that. but it has some things that we are supposed to consider. So we have here that a problem for the auditors, internal and external, is that when a work is being outsourced, they need to satisfy themselves that the external agencies are performing their work correctly. So when when a particular function in an organization is being outsourced, what it basically means is that you cannot rely on the information that you have been given, right, about that organization, because that organization is not your clients. You get, so there needs to be further steps to ensure that that organization is also at par with what your requirement is with the clients, normal clients. Okay. So now let's look at the advantages of outsourcing. Number one, it saves costs, right? There was a time where to cook was cheaper. But in recent times, you're craving turkey. You cannot buy one pieces. Abby, you either buy half or full. Full is like maybe 6-4. And you can do Chicken Republic refuel and buy 1K. So why am I spending that much, right? So in recent times, we have seen that outsourcing can come out as what? Cost saving. Number two, the skills of an external service provider. So the person that you're bringing into that firm, most likely that is their normal work. So because that's their normal work, they will have the toppest gadgets. They will have the most reliable documents and all of that. But if you're the one that is setting it up, you have to bring out a whole new function. System, salary, all of that. If you are doing team bonding, you provide for that person. If there's 13 months, provide for that person. But if you are using the skill of an external person, you don't take control of that person, right? So that is there. The third one is that access to up-to-date technology, just like I said, you may not already have them, but the person that you're outsourcing that function to, because that's their work. Like example, if you go somewhere and somebody has their phone and they snap you, if the picture is nice, you're surprised. Oh wow, I didn't know the picture was going to be this nice. But imagine you go and you pay for a photographer 300K. If the picture comes out now, would you be surprised? No, because you know that this photographer is supposed to obviously have the tools that he needs to make sure that his work has a certain quality, right? And then we have that the management of an entity, they're able to focus their time and effort on core activities rather than spending time monitoring outsourced activities. So one of the reasons why, like I said, this internal audit now, it is not a compulsory function, right? So because it's not a compulsory function, companies do it because they want to, not because there's any rule that says they have to. You understand? Okay. So now let's read the disadvantages of outsourcing. Okay, somebody can read for us. I can just underline this. So someone, can you hear me?
Yes.
Okay. So I just want to highlight this. Okay. Disadvantages of outsourcing. I thought people just said they can hear me now. I should be reading. I should just continue. Hello?
Hi.
Let me go. So I should call but no, now this is professional class. I
Okay,
should not
let me
be.
read.
No, I think you have read now. Deborah, have you read before? You have read now.
Yes.
Another person, Mr. Ifeanyi, please, you want to read for us? Modella, Victor, kindly read for us. Hello?
I read.
Is that Modella?
No. Zainab.
Okay. Zainab, you have read before too now.
No, I've not read. I just answered your question.
Oh, okay. Yes. Oh, yeah, you can read. Thank you. Just the disadvantages.
Okay, disadvantages of outsourcing. If the work is not properly specified, the service provider may fail to do everything that the entity requires it to do. Then,
Okay.
time limit the service provider to deliver the outsourced service. For example, when payroll operations are outsourced. Then next, there may be problems with negotiating an appropriate fee for the work with the service provider. Next, management needs to ensure that the service provider gives the organization an appropriate level of priority and customer care. This means that
Thank you.
management must carry out regular reviews of the service level and service quality provided.
Okay, thank you very much. Now, to summarize it, a major problem that happens with outsourcing is that there is no control. That person is not your own. That person is not your staff. So it just means that it's not like your staff that you're able to push around that, oh, I don't like what you did, and the person is fidgeting. You understand? The first one is that the service provider may not even understand the scope of what he's supposed to do. You understand? If that person is in-house, there's a in your CSM now, there's a work culture. You understand? That person knows how things are done in-house and they prioritize it. The second thing that is timeliness, right? You know how tech guys now, they're waiting. Oh, have we updated? Have we done the beta version? Have we Kinecon? And the people are saying, oh, we're working on the updates, we're working on the updates. You cannot beat them, you cannot do anything, right? Because those people are not under you. They can even tell you that, oh, we're busy with another client. That's why we have not responded to you. What would you do? The third one, we have that there may be problems with negotiating an appropriate fee for the work, right? So yes, we have said that outsourcing is cheaper, but sometimes when you look at how much, maybe they will not come clean and tell you. They will not come clean and tell you how much you have to pay. Abi, for everything, they can just say, oh, a one-off fee of 500,000, then the remaining payments is spread over 48 months, without knowing that the remaining payments is 22 million, right? So there may be problems with assigning a fee to themselves to carry out that work. Okay. The fourth one we have is that management needs to ensure that the service provider gives the organization an appropriate level of priority and customer care. So you have to make sure that, you need to have so many conversations with that client to be sure that the way you want them to prioritize you is how they prioritize you. It happened where I was working at a point, we integrated into a new HR software. And when we're talking to the sales team, that's before we paid for the service, they will always call us, make us feel like we are the best thing after sliced bread. Everything we're requesting, we want it to be integrated with our normal ERP system. All of that. They didn't complain. They said, there's no problem. Their tech guy can work on all of that. Tell me why we finish paying and it reached time for integration. And the tech guy is telling us that, what we're requesting for is impossible. And we're like, sorry, we had a meeting with your sales team and they told us that it's not a problem. Your tech guys have done this before now. So you can see that ensuring that outsourcing organization is prioritizing you and caring for you is not something that you can decide. It's on God. Okay? So any question from this? Any question from this? Yet another silence. Okay.
No,
so
ma.
let's move. Okay. So let's move on. Now, we said some entities outsource the work of we'll be out of here by 12 because I can't do 12:30 because I have another commitment. I think I've said that in the previous class. So it's a short class. So just contribute as much as you can. Okay? Outsourcing the work of outsourcing the internal audit function. Now, when some entities outsource the work of an internal audit function, when this happens, the service provider is often the accountancy service that provides the entity with its external service. The following factors should be considered when an entity outsources any of its internal audit function. All this one is just plenty English. They're basically saying that, let's say, for example, now Cadbury has KPMG as their external auditor, right? They may want to outsource their internal audits. They can now outsource their internal audit to maybe style partners or who again, they can use maybe BDO, right? So now they're not trying to say that before they will outsource their internal audit function, there's some things that Cadbury should consider. Number one, the accounting firm must have a greater level of independence than its own firm's internal audit staff, right? For me to be outsourcing, it means that I'm getting a better service, right? So I cannot outsource and go and give it to an organization that they don't even know what they are doing. It takes away the essence of outsourcing. Now, the second one we have is that the accounting firm may have access to highly trained specialists and employees. The third one, the accounting firm will have greater number of employees that are available for urgent audit assignments. The fourth one, professional code of conduct and standards of behavior will regulate the accounting firm. This may not be the case for an internal audit department. The fifth one is that the accounting firm may be sued for breach of contract, for negligence, and they should have professional indemnity insurance to meet up the claim for diligent work to meet up the claim for losses due to negligence work. Professional indemnity insurance is just insurance that all these audit firms have if somebody sues them and they have to pay a damage, right? So it's the insurance company that will cover. So basically, what I'm trying to say here is that before an entity would decide that, okay, we want to outsource a particular function in our organization, the entity has to consider all these 5 things and make sure that it is up to par or it is better than what it can provide for itself. Just like that's mentioned there, better independence, greater expertise, more staff, some certain ethical requirement that guides the function, and the fact that I can report to somebody, you understand, if the work is not done. Now let's look at the disadvantages of outsourcing an internal audit function to an external accounting firm. Number one, control. You understand? That person is not under your control. So to a large extent, you can't determine the extent of their work, or you could be having a conversation. You know how employees now, they recruited you for revenue assurance, but maybe there's something with rigs and they're like, oh, these guys needs more hand, and they're able to call you guys to step in. Abi? But your external guys, they will not hear that one, or they'll tell you that this is not the reason why you recruited me, so I'm very sorry, but I'll not be able to carry out that function. Abi? Next up, we have that there may be, okay, the second one, fees for an internal audit work may be high, right? So,
please, I have a question.
okay.
Okay, so for clarity's sake here, what's the difference between disadvantage of outsourcing with this one you're talking about, disadvantage of outsourcing the internal audit functions, external?
If you look at it,
kind of the same thing.
Yes, if you look at it, it's kind of the same thing. But the major disadvantage is saying that the major disadvantage here is that they are saying when you outsource specifically your internal audits to an external accounting firm, like you are giving your internal audits to BDO. But if you look at it, the answer is almost the same thing. Control is here. Oh, wow. You get control is here. Control is here. Are you with me? It is just that when you are being asked that question, you must put the answer in that context. And that is why AA is different from AAA. AAA, they will give you a case study. They're asking you internal audits, but maybe they've put a name of a company. They've told you Apex is reaching out to BDO, an external accounting firm, to be their internal auditors. What are the disadvantages of Apex reaching out to BDO? So they want you to put your answer in that particular context. You understand? That's just what the difference is. The second one is that, are you with me? Is that good?
Yes, thank you.
So the second one, fees, Abi, the same thing here. Abi, negotiate an appropriate fee. Next one, professional firms may not have the same level of detailed knowledge as the entity and operations that have in-house auditors working. This one is basically the fact that this is the first point that we said the service provider may not even understand the extent to which, right, that entity wants to work. They don't know the entity's values and all of that, and that can be a problem in itself. Okay, then we have the fourth one. There may be threats to the independence of external audits, where the firm acts as both internal auditors and external auditors. Like some organizations do, especially when they are like big firms. They believe that, okay, if we have people that carry out this particular service, We can tell them to carry out this service and it will not clash with our previous service. But the next time I teach you, we are going to do current issues. And when we do current issues, we talk about the concept of providing audit and non-audit service to one client and basically how it affects your independence. Okay? Now let's move on. The auditor is engaged by the client. The auditor is engaged by the audit client and has no contractual relationship with the service organization. However, the auditor may need to obtain audit evidence from the service organization. Clearly, it is important that if the service organization controls any accounting information for the client, the contractual arrangements between the audit client and the service organization should include an obligation for the service organization to provide the auditor with access to the information required. Now, they are saying all of this to say that you know that the service organization does not owe the external auditor anything. Let's use our example. Cadbury, BDO, KPMG. Abi, KPMG is our auditor. If KPMG needs something, right? KPMG did not recruit BDO. So KPMG in ordinarily should not be able to go and meet BDO and say, this is what we need, right? But it is Cadbury that will have to sign a contractual relationship with BDO, stating that if our external auditor needs anything, you must be ready and available to provide our external auditor with all the information that it will need to carry out this work. Okay? Everybody gets that? Hello, do we all get that?
Please substantiate between I don't really get this service organization. What does it entail?
Yes. So this service organization is basically who you are outsourcing to in this case.
Okay.
Anything, the organization that is helping you to do something that you are supposed to do. Like you're supposed to have an internal audit function in your organization, a department that is supposed to be running. Now, you are looking at it that, okay, the cost of setting other departments, I'll have to do recruitment, I have to pay pension, pay tax on this staff, all of that. Because of that, I want to go and outsource this function to an already established accounting firm that carries out this service. So that accounting firm in this context becomes the service organization. Does that make sense?
All right.
Yes. So now, what are the issues that an auditor should consider when there's this type of situation whereby it needs information from a service organization, and the service organization is not, for some reasons, coming through with the information it needs? Number one, the auditor should consider the materiality. Materiality is an essential concept in everything that we do as our work as finance people, because materiality just defines to a large extent how it affects you. Okay. Next one, we have accessibility to the records. We have accessibility to the records. So it is important for you to be able to access relevant records as an auditor, and you are supposed to discuss with the service organization as to the kind of information that you will need them to provide for your own work. Okay. Next one is control risks. So because, like I said, one of the major disadvantages of outsourcing is control. You have a way you are doing things, even if you're an ethical person. What if the service organization you engage, they are not ethical? Abi, what if they are not ethical? There may be a default or a deviation in your FS that is not caused by you, but because of the unethical behavior of the service organization. Okay? Now, we have compliance. Okay? Just like you said that, we'll give an example of, you said banks, Abi, when it comes to compliance. Banks are always trying to make sure that they comply with the rules and all of that. So imagine that a bank outsourced one of their services and for some strange reason, something goes wrong. Imagine that thing that happened. Recently, there was a glitch in Microsoft, Abi. And guess what? It was not from them. It was from an outsourced function that they had, that those people did an update to their own software that affected Microsoft. And they said that things were on hold, things were on hold, right? Airlines, hospitals, train stations, all of that, because of a glitch from a service organization. Do you guys get me? Are you with me?
Yeah.
Okay.
Yes.
Now, transfer of information. It's also very important for you to consider that. Do we speak the same language? Abi, what is the preferred means of communication between me and this service organization? This service organization, every time when you're asking them for information, they are saying, oh, let's have a one-on-one meeting. Let's see. Let's all of that. But you're like, oh, this thing can be sent via mail. I don't need to be there. Or the service organization is saying that we will not speak to you. We'll only speak to our clients. Are you with me? And that our clients will now give you the information that you require. So the means of transferring information is also an important thing to consider. So let's look at it. It said, if you are asked an exam question to comment on any outsourcing function, remember to think carefully about the relevant function you are being asked about and think through factors such as, number one, the logistics and practical issues of an outsourced operation, the confidentiality involved. Yeah, this is another problem of outsourcing. They believe that when you outsource, your control is being diluted. It's also control. Your control is being diluted. Like now, when your mommy was the one that was making that rice, Abi, when she gets to the party, she can say, Abi, nothing for you. But if it's a caterer that goes there, if she sees people sitting down, she will not even know the one that is daddy's brother, sister, uncle that bath you when you were small, Abi, and she may not rate the person. So, but if it is mommy that cooked and mommy is the one that is sharing the food, there is more control in mommy's hand, and some information that are confidential will not even go out. But because she's not outsourcing the function, she has to dedicate that, why was you giving this person food? You know, this person was the one that, when we got married in 1994, was one that first gave us our first house, you know? Information that should rather stay private, right? They are now going out because a particular function has been outsourced. So things like payroll, things like pension, you know, there's this feeling where how you look at somebody before you know their salary. But the moment you know their salary, you're like, oh yeah, I am buying shoe every day. I be buying new shoe every month. These are the same salary, you know. So because of the kind of confidentiality in the kind of work that we do, outsourcing an internal audit function is very, very critical. Then the speed of technological advancement. So you want to look at it that, okay, instead of us outsourcing this function, should we create this function by ourselves and learn on the job? Or is there such an automated function that if we don't join the moving train, we'll miss out on the trend and it may affect us? Then the responsibility of the function. So directors, for example, directors will still be legally responsible to ensure the proper accounting records are kept. So you cannot say that they cannot come and ask director now that, where are you? Where is your FS? Director that say it's not ready, I'll outsource it. No, it is still a direct responsibility of the directors. Directors only of the directors and rhymes. But he can just inform them that, okay, it has been outsourced, but he must still take control over it. Okay. So ISA 402, that's consideration when you are using a service organization. Like I said, service organization is basically any organization that you are outsourcing your service to. So they said when a client uses a service organization, there are some things that you should consider. That is the objective. And what is the objective? Number one, you want to make sure that you obtain an understanding of the nature and significance of the service that you are outsourcing and the risks that it can pose to your FX. Number two, you want to make sure that you have designed adequate audit procedures in response to the assessed risks that can come. So let's say, for example, you are emphasizing control risks. Example, you are emphasizing time factor risks, like this will not deliver to you on time. If you need it in August, we need to tell your outsourcing organization like you need it in July, just so that you have created time for all the back and forth that can occur. Okay. Now we have that if the auditor is unable to obtain sufficient understanding from a client, then it should obtain the following procedures. Now, let me just break this down. Like I said, everybody, are you with me? Like I said, when you outsource a particular function, right, you want to collect information from the service organization that your client has outsourced something to. Now, in a bid to collect that information, we have two types of reports that can be used to collect that information. The first one is a type A report, type 1 report, and the second one is a what? Type 2 report. Okay? So if you want to obtain information from a client, you can either get a type 1 report or a type 2 report. We'll go further on what a type 1 report is and what a type 2 report is. Number two, if you need an information from service organization, you want to contact the service organization on the specific information that you need. Number 3, it may be important for you to visit the service organization. Number 4, you may want to use another auditor to perform the procedures that the service organization has performed to see if it has been correctly carried out. Okay? Now, what is now a type 1 report? Very simple. A type 1 report is just an overview. The service organization is just giving you an overview of what they've done. Sorry. The service organization is just giving you an overview of what they've done, and they are telling you, so let me just read it. A description of the service organization system, control objectives, control at a specific date, prepared by management of the service organization. Sorry, I think you need to unmute. Okay. I think you need to mute, sorry. Then the second one, a reasonable care report on the above description and the suitability of controls to achieve specific controlled objectives. So basically, they're going to say that, okay, this is who we are, BDO is this organization, this is what we did, we created this client, Cadbury. For Cadbury, this is what we did to ensure that what we are doing is what we should do. That's the type 1 report, a general overview of the work that has been done. What is now a type 2 report? A type 2 report is a more detailed report covering not only the theoretical controls, but whether in practicals, the controls have achieved their objective. The description the description may now cover a specific period and may also report on the operating effectiveness of the controls over that period. So basically, the service organization will do a more detailed report. Okay, concerning risks, this is what happened. Concerning financial audit, this is what happened. On compliance audit, this is what happened. On value for money audit, this is what happened. So it's type 2 report is basically a more theoretical breakdown of the function that has been carried out for that organization. So now, the last thing we have here is that before relying on a type 1 or a type 2 report, the user auditor must be satisfied as to what the service auditor's professional competence and independence, and number 2, the standards upon which the report was issued. Are you with me? So they are saying that before you can even collect any reports from any service organization, you must be able to look at them and know that, okay, to a certain extent, I can rely on the work that these people have done, or I've looked at their team and I feel like they're competent enough to be able to carry out this type of work for my clients. Okay? So another question that can come out of this internal audit is basically things that the auditor should consider before relying on the work of an external auditor, right? And sometimes it can be all those competence, standards, years of experience of the internal auditor.
Independence.
Yes, the level of independence, and even educational qualifications you get of that particular internal auditor. So that's like the only time that they just asked the question that was out of this particular material. So you know how we do it now. I would stop sharing my screen now. We'll go to the past questions. Okay, I'll stop sharing my screen now. We'll go to the past questions and see how these questions were tested. Okay? It's a short topic, very short. We're going to first look at how many times they've asked it. I'll just reply here. Okay? So I've sent it. So let's look at how many times they've asked it. Okay? Internal audit and outsourcing. Just twice. Are you with me? It's not a simple topic. Do I have a class? So
it is.
It's short, so it's a relief because there's a lot to do.
There's a lot to do, and it's actually a walkthrough topic. Just hold on to some specific information. Hold on to some specific information, and you will be fine. Okay, so now let's look at the 2 times that they've asked it. Okay, so we're opening. Oh, wow, they've asked it twice. And okay, so let's open November 2022, question 6. Somebody will ask me that, where is it? So I know, here. Okay, November 2022, question 6. I'm opening it. When I open it, I will share my screen. But if you have it, you can also just open it from your end. Okay, I'll just screenshot the question and I'll send it to the group. Okay. So should I read? Should I read?
Yes, you can.
Yes, go ahead, please. Okay. So it says, the internal audit of Olivia Bank Limited has been accused of collusion with staff in committing monumental fraud. The following types of fraud were found: check suppression, fraudulent bookkeeping to overstate income, inflation of worthy companies' assets, intercepting replaced customer cards, fraudsters impersonating senior managers or CEO officer, online banking fraud such as malware attacks, clone websites, impersonating the owner of the account, using fake documents. Basically, I'm trying to say that the person that they recruited as internal audits is not working. The bank examiners came and were surprised at the level of fraud in the bank and requested for management to do something about it urgently. After the supervisory visits, the board of directors discussed the issues with the bank's external auditors, who suggested that the bank can outsource the internal audit function. The board of directors looked at the suggestion as being better and mandated the managing director to act fast and give them detail as at the next board meeting. The managing director has requested your firm to write a report to enable him forward the issue to the board of directors. Number 1, discuss the main reason for outsourcing an internal audit function. What's the main reason why we outsource an internal audit function? Oh yeah, what's the main reason? Because it is not a compulsory function. Companies carry it out as a result of their individual preference. Abi, companies carry it out for their own effectiveness. Are you with me? They carry it out for effectiveness of the management, control, and risk management, control, and governance function. You understand? So that's a major reason why the function in itself is being outsourced. Okay? Because organizations can do without not having the function. B, or you can say
They can
anything,
focus on their core services, right?
Yes, you can say, okay,
and manage their resources more
yes,
optimally, I think.
yes, you can even talk about the internal audit functions. You can say, because what they are doing is to effectiveness of operations, what they are doing is compliance, what they are doing is financial, you understand? And it is established by management to management. So because everything falls within an organization's framework, you understand, management can decide however they want to do it. And that is why they can decide to outsource it, you know? Like I told you, see, in AA, 2 people can write different things and still be correct. Because at this stage on your professional journey, it is not tit for tat. You understand? See a very short topic. And they could have just asked us difference or bedding. You understand? They still want to see your intellectual knowledge. They still want to see your professional knowledge on the subjects. You understand? As 3 marks. Then they ask a direct question. Outline advantages and disadvantages. I always tell people, this kind of thing, outline advantage and disadvantage. Don't rush into writing it. On one corner of your book, write out like 5 advantage. On one corner of your book, write out just the headings. So advantage, we have time. Advantage, we have cost. Advantage, we have skill. Advantage, we have up-to-date techniques, right? Advantage, we have meeting of ethical standards. Advantage, we have the ability to be able to sue them, legal actions. So you are missing out all those 5. Disadvantage, we have there's no control. They may not understand the scope of the work, right? They may struggle with timelines. You may have to dilute confidentiality of some certain information. Are you with me? So just put out all those key factors, write it down somewhere, then build on those points when you are writing your answer down. Are you with me? Do I have a class?
Yeah.
So
Yes, ma.
With you.
now, can you imagine inside all the pack, see what they asked again? Discuss which part of internal audit function that cannot be outsourced. God, I beg. So, who can tell me a part of internal, or maybe somebody that does the work normally? Which part cannot be outsourced? The answer is quite interesting. Let me tell you. What's the answer? Who knows the answer? Is one of the last things that is one of the, I said it towards the end. Should I give you hints?
Yes.
Yes, please.
When I said that,
the board's
okay, somebody was saying something. I'm listening to you.
It's fine. Go on, madam.
No. You're actually correct. So say it. What's the answer?
No, I'm just saying that there are aspects. Okay, like when it comes to risk management, the board's responsibility. There are certain responsibilities of the board when it comes to controls.
So
that part you cannot outsource it.
Thank you. That's the correct answer. The management or the directors, the board, they can't outsource the responsibility of the preparation, the correct preparation of financial statements being on them. Shareholders cannot come and meet you that where is this FS, or like this for this company now, see this bank, all these problems that they have. They cannot go and meet shareholders and say that the reason why we have problems is because our internal audit department, they don't know what they were doing. No, they have to still take responsibility of the fact that the financial statement is their responsibility and they are failed at their own responsibility. Just like in group audits, no, what we said now. The group auditor cannot emphasize on the work of a component auditor in his own audit reports. You understand? He can't say, I think this company is not a going concern, no, but the component auditor said that is a going concern. So who am I? No, he has to take responsibility of the whole audit reports. That's the same thing they are saying here. So can you see? I always say it. Go into your exam more and read, but go into your exam more with confidence. Your confidence should be 50-50. Your confidence should be 50. Your reading should be 50. Because I can whine you, but don't panic. Abi? You understand? So you need to, like now, students now, they can know these 10 marks. So because you don't know these 3 marks and 2 marks, they will leave your question. No, that's not how exams are being written. Especially at this stage. Okay? So let's just look at the other time it was asked. We have November 2019. Let's check question 3. November 2019, question 3. Okay, let me just search. Okay, question 3. I want to take a screenshot so that I can put it on the group. think that was too. Yeah. Okay. Auditing standards require auditors to carry out procedures designed to obtain sufficient and appropriate audit evidence. In order to do this, the external auditor may use the work of an internal auditor. The Audit or Chartered Accountant of Nigeria has organized a mandatory continuing professional education session to sensitize members on the work of internal auditors. As a senior manager in an audit firm, the institute has asked you to facilitate the session. Okay. What's the session on? Describe an internal audit function. 2 marks. It's an independent appraisal system, right? Established by management to ensure the effectiveness of the financial and operating information, compliance with laws, and the review of the value for money audits. Abi? 3 marks, abi 2 marks. B, explain with 4 examples the work of an internal audit, with the work of an internal auditor that the external auditor could rely on. This one too is not anywhere. But what are the internal audit functions that an external auditor can carry out? What are the internal audit functions that an external auditor needs? Abi, just look at what are the functions that we outsource. We outsource payroll. Abi, we outsource payroll. We outsource administrative tax. We outsource IT. We outsource risk management. So these 4 examples, they can be the work of an internal auditor that the external auditor can rely on, because these 4 things, they are management duties. Can you see how I'm linking it to?
I'm just curious, if this part of explain 4 examples, the work of internal auditor
Yes.
probably would have done some work regarding the effectiveness of internal controls. Then external auditors can also rely on it to an extent and carry out additional tests, so they don't have to go and
Yes.
start doing a complete appraisal,
Yes.
a
Yes. So
100% appraisal. They can build on what the internal auditor has done.
So yes, that's like an explanation of this question. But now they said with 4 examples. So instead of backing your head looking for examples, what you can just do is to look for the normal services that an external auditor carries out and use that. Okay. Evaluate 3 matters that the external auditor needs to consider in determining whether the work of an internal auditor can be used for the purpose of an audit. That's the last part of the material. Happy? Professional competence, right?
Independence.
Level of knowledge, independence. Okay. Then describe. Okay. See what they now said. Describe how an external auditor may evaluate the objectivity and competence of an internal auditor. What's different between these 2 questions? What is the difference? They are similar, the same answers, right? But now let's look at it closely. Describe how an external auditor may evaluate objectivity. So you'll be speaking specifically to what? So if I was you now, I'll say objectivity. Objectivity means being without bias. Abi, how can an external auditor identify that this service organization is without bias? Does it carry out other service for the clients? Are you with me? How long has it been with the clients? Does he have any other relationship with the clients apart from this work that he has provided? You understand? How were their reports framed? Were their reports framed towards effectiveness? Were there lapses in their reports? Then competence. Competence talk about skill. You understand? So competence is where your C now comes in. You understand? How can you say that somebody is competent? They must have the requisite knowledge, right? They must have required number of staff to be able to attend to that client, right? They must apply the principle of due care when relating with that client. Look at timelines for reports. Were they submitted when they should and all of that? Can you hear me? Do I still have a class?
Yes.
Okay. So short and sharp, and that's
objectivity. I know it's a stretch and maybe talking out of point, but
okay.
Can past records. Let's say that particular firm, yes, they are trained and they are
public reputation of the firm. Yes, because it's a
exactly, that
service
is the word
organization.
I'm using. That is the word I'm looking
Yes.
for.
Let me tell you, to pass you need to know English, oh. Because, and that's why you see sometimes they'll tell you that it can be two-way, sha. There's sometimes they'll tell you that people that are ordinarily auditors, they ace through AA better. But sometimes it can also be to your disadvantage, you know. So there's some parts of the park that are not what is happening in real life. What's happening in real life is a deviation from the actual standard that the ICANN or the body has put in place. So sometimes, like all kind of question now, there's an advantage for somebody that's already practicing. They can use their practicing knowledge to answer it. But someone that doesn't have any knowledge about it normally will struggle with this kind of question. Okay. So yes, that will be all for now. Short and sharp. Next week we have a longer topic, so we'll definitely spend more time. So I'll just ask, is there any question at this point for next week? Or if I'm the one that is coming, it will be current issues, or it may be Mr. Desalu. Any of us. I've sent the allocation now to the group, so you can go to the group and see my topic. But then if you see me, we're doing current issues. Okay?
Yeah, okay.
Did you hear me?
One of my questions. Hello? Hello?
Yes, I can hear you.
Okay, I have a question.
Okay.
Can the company outsource the preparation of financial statements to a service organization?
Yes,
maybe if the accountant is not competent enough.
Yes, they can. They do it in all these firms. They call it secondment. So somebody from the accounting firm.
So if the service organization, like a consulting firm now prepares the financial statement,
yes,
and you now engage the service of an external auditor. So
yes,
how will he now audit the financial statement of being prepared by the service organization?
Yes, because the service organization in this case is an employee of your clients. Okay. Because preparation of financial statements is a management function. So that's what they're saying, that from when you are engaging that service organization, you're telling them that, oh, okay, I also want to do external audits. So a time will come where people will come and they will ask you for information and you will answer them because you're the one that is carrying out this function on my behalf. Do you get? Like, let me use an example. We have, seamless HR. So there's seamless HR. People use it to pay salaries, tax computation, pensions, all of that. So if your your auditors come at the end of the year and they have questions as it relates to your HR, maybe payment of all those kind of things, you can set up a call with Seamless, 3-way call, use Seamless and your auditors. And Seamless will have to provide their own standpoint. Yes. So that's how it works. What we're still debating about is basically maybe KPMG saying that they are big enough to do accounting for one firm and still audit the firm, in the claim of they are a very big organization and their employees will not clash and they are two separate departments. Big organizations want to claim that they can do that and their independence will not be threatened. But I can typically say that there's no way that you're performing audit and non-audit function at the same time. Yeah, that kind of thing. So yes, that's it. Okay.
Please, sorry, I have a question.
Okay.
I just want to just clarify something, basically.
Yeah.
So even if an organization has an internal auditor, I thought at the end of the day, the work or the audit of that internal auditor is still subjected to like a check, like from an external auditor. It's not that they come and check the work carried out by that internal auditor.
Yes.
So at the end of the day, at source, like they'll still get, like what I'm saying is, even if I have internal auditor, I will still get the work of an external auditor at the end of the day. So
yes.
I don't know.
Okay, so now let me explain.
I know what you're saying that.
I know what you're
Sorry,
trying to
please.
say. Like, why am I spending so much money outsourcing an internal audit function if I would still carry out an external audit, if an external audit will still be done on the same work, Abi, where all the corrections will be made. Now,
Yes.
in organizations, it doesn't work like that. Let's say, for example, now one time I was listening to a conversation of a man that was in the legal and regulatory department of a telecom, and he was saying that for a particular day, he just said let him go through a particular tariff that they've put in place, and he saw that tariff was not following the law, and they've done it consistently for about 2 or 3 years. And if that persists, the fine they will pay is like 100 million or something. And immediately he called an emergency meeting with his department, all of that, and they escalated it, and they said, okay, don't worry, let's go and report ourselves to NCC. You understand? And it was like, it was church, so it wasn't like the testimony. He was like, when he got to the NCC office and he said, oh, we're coming to meet you, we have done something wrong, this is what we have been implementing, and from our understanding, this is not what we should implement. He said when he got there like this, they gave him a document that said, it's God that saved you people. We're compiling your file. Oh. We're already building a whole portfolio on you people's matter. And our plan was that next month we're going to come and give you a fine of about 250 million. Are you with me? So that is why internal audit is important, because audit is an accrual tax, right? At the end of the financial year. But the internal auditors are with you inside the organization. Okay? So your internal auditors are with you inside the organization, and that is why they are the best. That's why you want to get competent people that are able to tell you on a daily spot what is really going on and if you are really complying. Do you get?
Yes, makes sense. Thank you.
Yeah. Somebody wanted to say something. Please, I have a 12 o'clock commitment. I'm with you. Mr. Elvis, you can speak. Hello, who's speaking? You can speak.